One of the biggest myths about investing is that you need a lot of money to start. Many people believe I need thousands of dollars, I should wait until I earn more, or investing small amounts isn't worth it. But here's the truth. Waiting costs you far more than starting small. In this video, I'll show you exactly how much money you really need to start investing and what actually matters more than the number. I'm Khalstian, founder of EKH Capital. On this channel, we focus on long-term fundamentals-based investing, not trading, not speculation, and not hype. This video is part of my Back to Basics series, where we simplify investing and focus on what actually works. Most beginners ask the wrong question. They ask, how much money do I need to start investing? But the better question is, how long will my money be invested? It's important to understand that time beats starting size and compounding rewards early action. Let's take a simple example where we assume a 7% annual return. And notice something important here. In this chart we have two investors, one who invests $200 per month and the other $500 per month. The person who starts at 35 years old does end up with more money, but only because they invest more than twice as much over their lifetime. Now what this chart really shows is how powerful time is. Starting earlier means you don't need to invest aggressively to build serious wealth. So let's be practical. Today you can start investing with $50 or $100 per month. That's it. This is possible because today you can buy fractional shares, invest fixed amounts in ETFs, and there are no account minimums at most brokers. So you don't need thousands of dollars up front, a high income, or perfect market timing. If you can invest consistently, even small amounts can grow into something meaningful over time. Here's what matters far more than how much you start with. The three real drivers of success are consistency, by investing every month, discipline, by staying invested during market drops, and your time horizon, thinking in decades, not days. $100 investment won't change your life, but $100 invested every month for several decades absolutely can. There's one rule you must follow. Never invest money you might need in the next 5 years. You need an emergency fund first, which is typically 3 to 6 months of expenses in cash. Investing comes after, not before. This rule isn't about being conservative. It's about giving your investments time to work without stress. For beginners, ETFs or exchange-traded funds are the best place to start. They're diversified, simple, and remove unnecessary risk. But over time, as you learn how businesses make money, how to read financial statements, and how valuation works, you could gradually introduce individual stocks. But here are some important guardrails. Not all at once, not with money you can't be patient with, and not chasing hype or higher returns. The goal isn't to take more risk. The goal is better returns through better understanding. Stock picking should be an extension of your strategy, not a gamble. Many people quit early because they think small investments don't matter. But your first investments aren't about returns. They're about building the habit. Small amounts build confidence, discipline, and momentum. Once the habit is there, increasing the amount becomes easy. You don't need more money to start investing. You need a decision. The best time to start was years ago. The second best time is today, even if it's with $50. If this video helped you, like it so more investors can find it. Subscribe for clear, no hype investing education. And comment below, what amount do you feel comfortable starting with?